In this video, we will be discussing a pullback and rejection of VWAP entry on a downtrending day. Here we have Wednesday, September 28th for the overnight session and our upcoming regular trading hours on the 29th. As we are looking at our overnight inventory, we see that the inventory collected from the previous day is starting to be liquidated in the overnight session as it comes back to challenge VWAP. Prior to the market, once we've identified our overnight inventory, we will also place levels of support and resistance for our use throughout the regular trading section. As it stands, just before market opens, we see that inventory is beginning to collect again just below VWAP. We see a sell-off just before the market opens, but continuing to hold our area of support. And when the market opens at 9:30, we have a sell-off at the rejection of VWAP and a continuation down below our level of support. At this point, we may be thinking immediately that it's a downtrending day, and we will be looking for a rejection of VWAP for a continuation to the downside. As the candles play out, we see another large sell-off into two standard deviations down, which does give a reversion from 2 standard deviations back to the VWAP line. Just like in our uptrend, in a downtrend, there will be a group of traders all over that believe that the price is too undervalued as we get to 2 standard deviations below VWAP and beyond. We could expect some level of buying at these prices, but until it gets to VWAP, which we could view as the line in the sand for that day's trading, we cannot expect the price to go any higher. Ultimately, if the buying was strong enough and enough participants truly believed that the price was undervalued, crossing and holding the VWAP line to the upside would result in a change of character or a change of trend. Until that time, it is safe to look for rejections of VWAP as the market agrees that the price ought to go down in search of new buyers at lower prices. As we move up, we challenge VWAP and ultimately reject it, confirming for us what we believed to be a downtrending day. Since we came off the sell-off in the morning, came back up to move back into value from the overnight session, but rejected VWAP for a further liquidation event. As our suspicion is confirmed, we want to consider now opening our short position on the candle close with our stop loss just above the 30-minute period we entered, targeting a 2-to-1 risk to reward ratio. As the play unfolds, we'll see that our entry was sufficient enough to reach our 2-to-1 risk to reward. As we came up in a downtrending day, rejected VWAP from the underside, found a safe and comfortable entry on a candle close, using that candle high as our stop loss, and holding our position until we've achieved a 2-to-1 reward to risk ratio. In all three of our trading examples, we see that the use of the VWAP line can help us paint the picture of the story of what's happening within that trading day. When you find yourself confused, simply look at the VWAP line as the prices that are the most agreed upon by all of the market participants for that day. The standard deviations below VWAP can give you hints that the price may be undervalued, and look to either return to VWAP or even move beyond as enough buyers become excited at the new buying opportunity. Conversely, when the prices are already up and moving to higher standard deviations beyond, it may be seen that the price is currently too overvalued and not worth what it's being sold for at that time. The trader can expect the price to go back to where everyone agreed it was a good deal, which is VWAP. Using VWAP in your trading will simply let you decide whether or not the price is fair or unfair. And by seeing where it finds its support and resistance with the standard deviation lines, you can make high probability trades using both VWAP and the standard deviations themselves as price targets,